politicians and civil servants have no understanding of money at all. They're not sort of a bit flaky or a little bit vague. They simply don't understand any of it. You have to understand, and you already do, but anybody watching this clip, that the average politician and academic is a moron. There's no other word. They're morons. They don't understand anything at all. And worse, they don't want to learn.
Hello everybody, Simon Dixon here, and welcome to the 4th episode of Bitcoin Hard Talk, where we have hard talk about the hardest form of money. Today my guest is Godfrey Bloom. Godfrey Bloom is a city pension consultant that got into politics, and he was a self-professed gold bug and has recently started looking at Bitcoin. He wanted to find people that could help him understand a bit more about Bitcoin, so we jumped on a Zoom call and decided to record an episode of Bitcoin Hard Talk. His background, as I said, he was involved in the pension industry in the City of London. He got into politics in 2004, where he represented the city of Yorkshire in the European Parliament, and for 5 years set the Economic and Monetary Affairs Committee. He was part of that. He's also a member of the Mises Institute for over 15 years, so fully understands many of the concepts behind banking, fractional reserve, money creation, the importance of gold, and we discuss all things Bitcoin and politicians' understanding of the banking system that are actually setting the policies that affect us all. So we're going to head right over to the 4th episode of Bitcoin Hard Talk with Godfrey Bloom. Hello everybody, Simon Dixon here, and welcome to another episode of Bitcoin Hard Talk, where we have hard talk about hard money. And today, this is all working as it should be. I've got a very special guest today, which is Godfrey Bloom. If this is working as it should be, this will go out on our YouTube channel and also Godfrey's YouTube channel as well, which is a different audience. I'm going to give a quick intro to Godfrey, and then we're going to discuss pensions, we're going to discuss gold, and we're going to discuss Bitcoin, of course. So to give you a bit of background, Godfrey used to work in the pension industry, and he used to advise in the city and more on a consultancy basis. He entered politics in the UK in 2004, and Godfrey will correct me if I get anything wrong here, representing Yorkshire in the European Parliament. He spent about 5 years in the Economics and Monetary Affairs Committee. He is a member of, which I think is very interesting, the Mises Institute, and spent the last 15 years in that, is Austrian economics. A self-proclaimed gold bug since the 1990s. More recently, this conversation came about because Godfrey actually put out a tweet where he's diversified a small amount of his gold position into Bitcoin, and he's looking to learn more about Bitcoin and meet more people in the Bitcoin community. So Godfrey, how does that sound? Does that sound accurate?
Yeah, it sounds pretty fair. Yes, thank you.
Excellent. Okay. So, Godfrey, why don't we just start at the beginning? So, you're a self-proclaimed gold bug since the 1990s. What is it about gold that you like, and how did you get into holding, I think you said about 95% of your retirement or portfolio in gold?
Yes, that's right. To be fair, I made my portfolio to start with in equities. I worked for a great equity house, the Warburg Empire, in the city, and other city institutions before that. So in the 80s and in the early 90s, I made such money as I have. I managed fixed interest for a living for pension funds, which was very unglamorous. So I didn't make big bucks in the city like everybody else, I'm afraid, but never mind. So I'm a pension fund manager primarily. And I was getting to the stage where not just me, but my own portfolio, but my clients' portfolios were getting to the stage where they wanted to protect their wealth. They wanted to protect their wealth. They had a good run in equities, and that was fine, and so did I. But it gets to the stage in life, and I'm there now, in spades, I'm afraid, Well, I want to protect what little money that I've actually made. And I've always seen gold as being a protector of wealth, and gold as real money. And I take the Mises view that I don't regard gold as an investment. I regard it as hard money, and that's the difference. So what I always do when I'm lecturing, and I used to do a lot of lecturing at universities, at Cambridge and Oxford and places like that, I always hold up a gold sovereign, and the date on that gold sovereign was 1908. And I say to my undergraduates, I say, look, that 1908 sovereign, which was the equivalent of a £1 coin, if you will, in those days. And that would buy you bed, breakfast, and an evening meal in a middle-ranking hotel in London. That's what it would buy you. And a sovereign today is worth about £380, and that'll buy you that today. And if I leave it to my antecedents and they keep it kicking around for another 50 years in the bottom drawer, it will buy that in 50 years' time. And we've seen the dollar degraded since Nixon left the gold window. In 1971, we've seen the dollar degraded by over 90%. So gold is a store of wealth, which money should be, a store of wealth. And that's why I am a gold bug. And have been a gold bug since my Chancellor of the Exchequer, Gordon Brown, was selling it at something like $250 an ounce, selling the British people's money. I was buying it then with the money that I made in equities. And I think cyclically, if you're managing money, you have to go with the asset flow at the time. And I think times they are changing. And I see gold as a strategic store of wealth. And that's why I'm a gold bug.
Okay, very interesting. I do remember very well, I was living in the UK at the time when Gordon Brown announced that he was going to be selling off the England's gold supplies. I think it was around about $250, $300 if memory serves me well. And now we're obviously approaching the $2,000 mark at the moment. But what I've always found interesting is that obviously many countries don't really want to push the importance of gold. But if you look at, rather than the words, if you look at the actions, central banks all around the world are holding gold as a store of wealth, even if Gordon Brown is trying to sell all that off, or was trying to sell all that off. So I think it's very interesting from the political side of that gold has served that purpose for over 5,000 years. And yet these fiat currencies are able to be controlled by the forces that be, whether that be the government agencies or central banks. And so, yeah, tell me what do you think it is that people should be doing? Should they be following the central banks? And obviously you coming from the pension side in more of fixed income side, you've obviously always looked at ways of earning returns on your money, and gold hasn't performed that role. How do you see that?
Well, when I was managing the fixed interest aspect of pensions, of course, what a lot of people don't understand is that corporate pensions were based on dividend yield. It was the yield of the fund. The capital value of the fund wasn't frightfully important. It was the yield it made, and it was the yield on the fund that actually paid the pensioners, and the increasing dividend yield on the equities and bonds that could pay people increases in retirement. Now, Gordon Brown changed all that by taxing dividends. That was the first way he stole. Governments are thieves. It's a kleptocracy. Governments will steal your money if they possibly can. And so they actually taxed dividends on pension schemes about 1997. And I went on BBC to explain, this is miles before I ever had anything to do with politics, how they work. And it was quite stunning. Politicians, mainstream media have no idea at all how pensions work. And I saw the writing on the wall. They saw these huge billions of pounds worth of pensions as something that they could actually tap into. They could actually steal. And because most people don't understand pensions, it's very easy to steal something from people that they don't know they actually have, or they don't know how it works. And of course, this is how the government works. Also, government are targeting, and central banks are trying to make 2% inflation happen or if you prefer, the degradation of currencies to the tune of 2% a year. That is their goal. It isn't a secret. I'm not giving away some sort of secret plan, or I'm not talking about some weird hypothesis. The government have actually said, and their central banks, which are not independent at all, don't be fooled by that, they're selected and governed and paid by politicians to actually degrade money. That's what they've said they're going to do. It's not my theory. They have said they're going to do this. So they are going to degrade money quite deliberately. And of course, when I was very young doing my exams, I'm going back to the 60s, inflation was the bogeyman. Inflation was something you feared. There was no way that banks, central banks or politicians they couldn't do much about inflation. But they didn't seek it, and now they actively seek it. Now that made managing pensions impossible. If you have a government whose target is to degrade money, you can't manage people's money properly for their retirement. So consequently, you had to find another asset class. And of course, the main asset class that has stood the test of time, as you rightly said, for 5,000 years, has been gold. Gold is money, as of course the great J.P. Morgan said all those years ago, over 100 years ago. Only gold is really money, because gold is something that the state can't degrade. And that is why I like gold above everything else for the preservation of wealth. Not necessarily long-term investment, no, but for the preservation of wealth, it has to be gold. That's why I was attracted latterly. I've understood Bitcoin. The concept of Bitcoin is very straightforward to me. I didn't know much about the logistics, and I still don't know much about the logistics of Bitcoin. But of course, Bitcoin, I come latterly to Bitcoin, not because I'm not a Damascene convert from gold to Bitcoin. It's because Bitcoin can't be degraded by governments. And that's the major attraction of Bitcoin. That's why I'm starting to develop my portfolio in that direction, but not at the expense of gold. It's a big mistake. And a lot of the Bitcoin community that I've come across so far, who are very, very friendly and seem to be very nice people indeed. And I've enjoyed the experience in the last 2 weeks. But there are some of them who think that somehow it's gold versus Bitcoin. And that is an irrational position to take, in the same way, and I'm a military historian as well, I'm a published military historian. Defending your wealth is like defending your country. And if anybody says you can defend your country only with an air force, or only with a navy, or only with an army, is being irrational. You need all these things working together. And I see Bitcoin and gold as being totally complementary. And I think that's something that everybody needs to learn. Everybody needs to come together understanding this, who believes in not having their money degraded by the state. They are complementary and we can work together.
Yeah, absolutely. This is something that does cause a lot of controversy in the Bitcoin community. The younger generation, they're not philosophically, well, they would be they are philosophically aligned with gold, but they don't know that they're philosophically aligned with gold when they push, Bitcoin. And some of the older people, they do find it more challenging to get over some of the technical barriers because they weren't brought up with all this technology. And so these are two really, challenging barriers that lead to people changing their ideological beliefs around what gold is and what Bitcoin based upon what they can get to grips with. So really, the key is for to appreciate that they are really the same argument. In terms of what they do, they are independent of fiat money. They allow you to own your own money. They allowed you to spend your own money. And Bitcoin has a fixed supply and gold has a supply based upon what can be mined out of the ground, and this can't be printed off the whims of politics. But one is more philosophically aligned with the older generation and the other is more philosophically aligned with the younger generation. But what I try and help people understand is that, as you said, Bitcoin is it's not a store of value yet. It's a speculative store of value because people are betting on the potential for it to actually perform some of the role that gold can perform, and have improvements as well as things that are not so good. So, it's a lot easier to store your Bitcoin once you've got over some of the technical barriers. But with gold, most people just move it over. With both Bitcoin and gold, they tend to move it over to a custodian. They store it in Switzerland, or they store it in Singapore in the case of gold, or in the case of Bitcoin, they store it in an exchange, which is just the same as storing it with a bank. It's not Bitcoin once it's at an exchange. So how do you see some of these bridging, I guess, with people from the older generation, how to overcome some of these technical barriers in order to, once they appreciate the case for Bitcoin?
Well, I was quite surprised at my response to what we've been doing so far. An awful lot of people who weren't young were asking me how to obtain gold, how to buy gold, how to store gold. So I was a bit surprised, to be honest, how few people actually understand how to go the gold route, never mind the Bitcoin route. And I've just finished a little video which is coming out at the weekend explaining actually how to buy and how to store gold and the ins and outs of that in the same way. So I can help people buy gold in the same way people came to my rescue, particularly my colleague Patrick came to my rescue on how to actually buy Bitcoin, which is a fairly daunting procedure. It's much more daunting, actually, in my view, than buying gold, where you pick the phone up, you buy it, and they send it, arrives the next day. It's a fairly straightforward thing. So the logistics of these things, I think, are important. The gold comes with baggage. Just, we all know that. Gold is difficult as a medium of exchange. It's a totally proven store of wealth, gold. That is indisputable. It's a store of wealth over 5,000 years. You can't argue that. But of course, it's difficult as a medium of exchange. I'm talking going back to my little 1905, 1908 coin. I can't go down and buy a bottle of whiskey with that because it's now worth 385 quid or something like that. It's just too big. And this is how paper money came about, backed by gold, because people didn't want to lug metal all over the place, heavy metal. It's much better to store it as a strategic reserve, then back it with your medium of exchange so you can continue commerce. It's about commerce, it's about buying goods, it's about buying services. And gold does have a problem in that. And of course, if the people issuing the paper, and this is what we saw in 1971 when Nixon came off gold and produced the petrodollar, what we actually saw was if you can actually print money, or what is loosely termed money, let's be honest, if we all had a little machine in the attic that every time we ran short of money, we could actually print it upstairs, we'd all do that. Of course we'd do that. Who wouldn't do that? But of course, the flip side of that, it does degrade the paper. And so when we get rid of an asset-backed fiat currency, which we did by getting rid of the backing of gold into paper currency, that gives us a problem. But it leaves us with the baggage of gold not being a very easy method of exchange. And that's where Bitcoin came in, because Bitcoin has the future to be enormously valuable as a medium of exchange. And a store of wealth which cannot be degraded. Now, we've also got to bear in mind, haven't we, if I go to a little Indian village, remote India, which I have been over the years, I can take a gold sovereign and give it to that head man, and that head man would be deeply grateful, because gold is money in a remote Indian village or South American village or wherever it happens to be. Gold is accepted as money. And for money to be international money or even great national money, it must be accepted. It must have the trust and it must be accepted. And Bitcoin isn't there yet. Bitcoin isn't there yet. It's getting there, in my view, which is the reason I'm starting to add that to my portfolio, is because I think it's getting there. And I think the future is digital cryptocurrency, call it what you like, but it certainly isn't digital currency run by the Fed or the Bank of England, the ECB or the Bank of Japan, because they will steal it and degrade it, because that's what they do. So Bitcoin is the way forward, or something like Bitcoin, for your daily transactions and your ease of medium of exchange. It may prove over years to become a store of strategic wealth, but we're not there yet.
Yeah, so Godfrey, switching gears slightly, you've had a political career in the UK. You may or may not know this, and many of my viewers may not know this as well, but before I got into the Bitcoin community, I actually found Bitcoin because I was trying to push some political change in the UK, which is where I lived at the time. And I left banking in 2006, and I was trying to help different politicians understand banking. And what I was really surprised by and also I think I've seen this in some of your content, was the lack of understanding of banking that actually exists in the political sphere, where all these policies are actually being determined. So a few things I'd like to share with you, and then I'd like to get your perspective on the state of affairs of politicians' understanding of how banking works. One of the things that I did before I discovered Bitcoin is I spent some time with the Independent Commission of Banking in the UK, and it was chaired by David Davies at the time. And he was pretty much responsible for all the investigation of the banking system. And at an event where Vickers was speaking, I asked him some really basic questions about his understanding of how credit is created, how money is created. And I found his understanding completely off. And I found that many of the Austrian economics seem to have a greater understanding, but different economists seem to have different one. We actually did a study at the time, and there was a not-for-profit that came from a company. One of the guys was working for us, and he went around to over 600 different MPs, and only found 4 of them that had a good understanding of how banking and money is created. And I remember at the time as well, there was a monetary reform bill that was put through. It was about changing the Bank Charter Act of 1844, removing away banks' ability to create money. Presented on this in House of Lords. The understanding that the politicians have, which is why I actually decided to leave and not bother with the political side, because it was just not happening. So when a system gets created that exists outside of banking, decided to dedicate all my time to that. But share some of your experience as an Austrian economist, as somebody that appreciates gold and understands money. What do you think different politicians in both Europe and UK, what is their understanding like of how banking actually works and how money is created?
Well, of course, you're quite right. When I got into elected politics in 2004, I'd never been involved in politics at all in my life. I wasn't even a member of a political party. Of course, as you probably know, I came into politics because I just wanted to return to self-government in the United Kingdom, and that was my sole goal. And everything else was really to the side of that. So, but what I found was absolutely fascinating. I had exactly the same experience as you. That politicians and civil servants have no understanding of money at all. They're not sort of a bit flaky or a little bit vague. They simply don't understand any of it. And of course, we've had an educational system in now for 2 generations. If the only bit of economics that they understand at all is Keynesianism, that's all they understand. John Maynard Keynes. They couldn't name another economist. There are no Austrian school professors in the United Kingdom, and to my knowledge, only 1 in the United States. So they only have one dynamic. And when I was lecturing at Newcastle University, an Austrian school economics, a young man came up to me and he said, I asked our professor why we don't cover Austrian school economics, so on and so forth. And that professor said to him, well, if you want to cover that sort of thing, you should have signed up to read philosophy. Now, this is the kind of standard of academic education that's going on. You have to understand, and you already do, but anybody watching this clip, that the average politician and academic is a moron. There's no other word. They're morons. They don't understand anything at all. And worse, they don't want to learn. And it prompted my little book. I did a little book, an aid memoir rather than the book, called The Magic of Banking, to try and explain, not to politicians who don't want to learn. Politicians don't want to learn, but your man on the Clapham omnibus, your intelligent man on the Clapham omnibus, or the Americans would call him Joe Sixpack, knows he's being screwed, but he isn't quite sure how they're doing it. And so the wee book is there to explain how they do it. And they don't understand it. And when I sat on the Monetary and Economic Affairs Committee in the European Parliament, I was in the extraordinary situation. There are 40 people on that committee making decisions which affect the whole of Europe as far as money and banking is concerned. But it's made, of course, of Bulgarian socialist trade unionists, Danish housewives, so on and so forth. These committees who sit making these decisions are absolutely hopeless. And I found that I was trying to explain how something worked. They wanted to regulate investment trusts, for example. I had to explain what an investment trust was to a committee that was about to legislate on it. They wanted to regulate hedge funds, and I had to explain that I've been nearly 50 years in finance and I don't understand hedge funds. So how the hell they think they can regulate it, I really don't know. It's all too complicated to regulate, because it's a moving thing all the time. So it's absolutely hopeless. But here's the rub. Simon, here's the rub. I've lectured at banking conferences. Bankers don't understand money and banking. Least of all the last comedian who was the Bank of England governor, Carney. Not a clue. Not a clue. And this is how, of course, you have your degraded money and your debt. And the debt now that this country has in the United Kingdom is over 2 trillion. And that's quite a pathetic judgment, believe me. Let's say it's 2 trillion. These figures, these numbers are beyond human imagination. I mean, Deutsche Bank alone has shadow banking liabilities of nearly €1 trillion. It's beyond what most of us can think about. So what actually happens is people don't think about it. They go, it's all far too much to worry about, any more than they worry about asteroids or people living on another planet in another galaxy. So politicians just don't get it. And of course, they're 5 years in office. They're 5 years. All they're interested about is, can they get elected in another 4 or 5 years' time? And the way to do that in a welfare state is to promise people more money. And more money is what they promise, and more money is what they deliver, hoping that they'll have moved on when the reckoning comes. Well, the reckoning's coming, I'm afraid. The reckoning's coming. We're not far away from a complete collapse of the banking and fiat currency system. Sorry for the rant there, Simon.
No, that's I think it's really important for people to understand these systemic problems, that the reality of politics is that you're trying to look as good as you can for 4 years, which means short-termism. Nobody wants to be the politician that reforms the banking system and potentially tries to unwind many of the unsustainable policies that have been built over decades and decades of these systems. And if they were to unwind it, 4 years, they might look like a very bad politician. And the reality is that they won't get the next vote because people want you to spend more, is the reality. If you can spend more and promise more, then you might be able to get that term. And then on the flip side, you've got these banking. So, my experience, when I used to work 100 hours in investment banking a week and knew how to do corporate finance and take companies public, but there's no time to understand what the impact of what's happening behind the big cog and the big wheel, and so I had to actually take time out just to understand, the complexities of our financial system. So it is definitely a systemic problem. And then you've got policies being set by people that really do not have comprehension, and lobbying efforts by banking, making sure that they're getting things the way that they want them. And so to me, I ended that it's just hopeless. You've got to wait for the system to collapse before anyone's going to be motivated to make any kind of change, which is why I got involved in things that happen outside the financial system, because it felt like just a much more effective way. Give people a choice and exit, then you can actually get somewhere. And so one of the things I see is that, politics, and people understand that fiat money and politics, if you have, your value being degraded as a goal, as policy, as an inflation target, as you say, then really it's a signal that they don't want you to save in fiat money. That's not what they want you to do. The sensible strategy is to go deeper into debt. In economics, we call this trying to increase the velocity of money, how many times it circulates around. And the problem with gold and Bitcoin is it has low velocity. Once people get into Bitcoin, they don't necessarily want to spend it. They want to keep it because of Gresham's law. They want to keep the good money and spend the bad money. So you end up spending your pounds, your dollars, and euros, and keeping your gold and Bitcoin. So I guess the critic is that we have to end up in this system whereby you have money that encourages spending, and then you have people that are actually need to appreciate that you can't save in fiat currencies. You have to actually enter hard money. I think that's where gold and Bitcoin come in, and hopefully everyone's listening and heeding that your retirement and your pension, you have to start looking at some of these hard assets.
Yes, of course, people have bought into the Keynes. John Maynard Keynes was hostile to savings. He thought savings was a bad thing, and he thought consumption was a good thing, which is an easy sell on the political doorstep, if you think about it, isn't it? There is such a thing as a free lunch. We're having this argument at the moment in the United Kingdom of whether children should have free meals through the holidays. But we use this word free with abandon. There's no such thing as free. There's nothing is free in life. You have to pay for it. But we never use the term taxpayer funded. So we have so-called free this, or we have free transport, free public transport for the over 60s. It isn't free, it's taxpayer funded. Lunches for poor children over the holidays is taxpayer funded. Now, you may think that's good or bad, and I take no view particularly one way or the other, but look, we must tell it how it is. It isn't free. So do you want this to be taxpayer funded or not? Now, we have a problem, certainly in the United Kingdom, and I think most of Europe. People make no judgment. They do not associate public spending with being their money. They think a government has money. And of course, we know that government doesn't have any money at all. The only way government has access to money is either they borrow it, they tax it, or they print it. That's the money that they have. They don't have any money of their own. They don't create any wealth. And of course, as the public sector gets bigger and bigger, you actually then have so many people in the public sector who are sponsored by government, who believe in public spending, the more public spending, because they're recipients of it. And the ball goes on rolling. So your wealth creating sector is now finding the burden of the public sector too heavy to support. And you will find, I'm very sorry to say, you will find some economists, even at the Adam Smith Institute, which is supposed to know better, that they don't understand what a wealth creator is. They think a wealth creator is some captain of industry. But of course, we know, as Austrian school, that your wealth creator is the butcher, the baker, the hairdresser, and the cab driver. In fact, the wealth creator who is anybody who is not in the public sector. If you're in the public sector, you are a wealth consumer. You may be a worthy wealth consumer, but you are a wealth consumer, not a wealth creator. And we should have a much smaller administration and public sector section, so we could have less tax and less regulation, which is what an economy needs to thrive. We don't have any of that. We don't have any political parties who want to go down that route. They all believe that the man in Whitehall knows best. And sadly, the average Joe now has been led to believe that the politicians and civil servants actually know what is best for their family. Because we're now in the second or third generation of welfarism, which of course came through in the late 1940s into the United Kingdom. And that's what people believe. I don't know how we're going to change that mindset until it goes so wrong, it goes so bad that people have to wake up to reality. But history shows us, Simon, doesn't it? When things go really bad, people turn to an even more authoritarian state. They don't turn to libertarianism or entrepreneurism, do they? They turn to the problem that caused it in the first place, which is too much government.
Yeah. Switching gears slightly then, you talk about the importance of actually owning gold and ownership. I think one thing that society seems to have shown is that you have fiat money, you have cash, which you can actually own, but then as soon as you put it in a bank, it's no longer yours. You have gold that you can own and you can take physical delivery of, very scarce, but there's, many, many times more paper gold or gold contracts or ETFs or, these versions of gold that aren't actually gold. Same happens with Bitcoin. You can own your Bitcoin, or you can end up, inevitably, most people end up just holding it in an exchange, in which case the exchange owns it. So with fiat money, you've got the bank owning it. With gold, you've got the custodian owning it. And with Bitcoin, you can have the exchange owning it. And people seem to always take this same choice over and over again. I guess the problem is that ownership of these assets is actually something people are actually quite fearful of. You have to learn the security of how to secure some Bitcoin. You have to learn the security of how to secure some gold, and you have to learn the security of how to secure some cash. And then suddenly your cash gets replaced by a new note, and they force you through some kind of demonetization program to get it straight into the bank so they can rehypothecate, own it, spend it, and do as they choose. So for the select people that will actually listen about the importance of ownership, how do they overcome some of these barriers?
It's very difficult, isn't it? I have been banging the drum for quite a while as far as gold is concerned, and I bang the same drum when it comes to Bitcoin. If you don't actually have it physical possession, you don't own it, you have a counterparty risk. Excuse me, the last thing you want is counterparty risk with these bad times coming. So your gold must be in your own lockup with your own key, or if you don't own it. And you make a very good point, which I've been pointing out for some time, with ETFs, that if you go to your bank and want some gold, they will give you a certificate, which is a promissory note, and they will buy an ETF. But they don't have the gold. So if you ever knock on their door and say, right, I'd like my gold, and they will give you the spot price. But they don't have the gold. They don't have the gold. But they pretend they have, and I made a point in my We Aid memoir on this very same thing. I think it's very difficult to tell, but I think there's probably about 500 pieces of paper for every piece of gold. So the thing that suppressed the price of gold, of course, with the sanction of things like the SEC and financial regulators in Europe, is that you can trade gold, you can bet against gold in paper without actually having ever owned it or ever owning it. I've regarded this personally, of course, as a good thing because it suppressed the price of gold, which has now enabled me to acquire it. And indeed, it's enabled, on a rather larger scale than me, the Chinese government to acquire it and the Russian government to acquire it. So the Chinese have been acquiring gold, of course, for a very long time. And in the Far East, of course, where gold is very much more appreciated, much easier to buy. And when I was in Hong Kong, you could just go and buy gold over the counter in most retail banks. You can go and do that. Now you have to go to a bullion dealer. It's still easy, but it's not as easy as it was in those days in Hong Kong. And the Chinese have encouraged their people to own gold because the strength of a nation is not just in its government gold holdings. And of course, we now know, don't we, that the German government are taking the same view. They've asked for their gold back from the United States because they're not too sure. They wanted it was in the United States because there was a threat from the Soviet Union. But there's no reason that Germany now shouldn't have its gold in its own lockup in Frankfurt or Berlin or wherever they want it. So governments are waking up to this now. I mean, you could argue about Venezuela all the time, but their gold was in London and gold wouldn't release it to them. and the Swiss now are prepared to go along on demand with other countries' tax authorities demanding this, that, and the other. Now, the Swiss used to be a bastion of privacy, and they're not any longer. The pressure from governments to steal gold and everybody to steal everything. As I said, I was speaking at Hamburg a little while ago. You are far more likely to be robbed by the government than a burglar or a mugger. Far more likely. They rob you every day. You buy a glass of wine, you buy a pint of bitter, you fill your car with petrol. They steal it every day. The chance of being burgled or mugged are actually quite slim if you live in a reasonably civilized society. So yeah, this is the problem. Counterparty risk. And it's the same with Bitcoin. And you must have it, and I'm getting a bit more familiar with the jargon, you must have it in your personal wallet, and no other can get anywhere near it. It's yours. And of course, then you have your store of wealth. Otherwise, it will be stolen or traded. And I made this point a little while ago. If we are not careful with Bitcoin, we will find that we will end up in the same situation with gold, with Bitcoin being traded in paper. There'll be a paper counterparty, and it won't reflect the real price of Bitcoin at all. And that's a danger. That's a danger that Bitcoiners must be well aware of and must be looking out for.
Yeah, we're already there. The amount of products that are being created, especially with new laws being passed to allow banks to actually take custody of Bitcoin as well. We're already heading down the same path as gold. We're already seeing, these products and derivatives being most of the trading volume. So it's I don't think that's going to change, and we see the same thing happening with Bitcoin as well. But as you said, we saw during this pandemic outbreak that when everybody tried to get their gold during the beginning of this, there was actually a massive shortage of people actually trying to get physical delivery of gold. And so it's in these times when you realize that your gold might be when you need it the most. And if it's in lockdown and you can't fly and you've got to go to Switzerland or Singapore to try and get it, or whatever it may be, the reality is that when you hold it with a custodian, you've said it. Who's most likely to steal it in these extreme times? Well, it's the government that's most likely to do that. It's a lot harder to do that when it's distributed amongst everyone owning their own Bitcoin or gold. One more subject I wanted to cover before we take any of your questions that I might be able to help you with on the Bitcoin side is you're an advocate for free banking. One of the big topics at the moment is the fact that governments all around the world, central banks all around the world, organizations like the IMF calling for Bretton Woods 2, all of these organizations, they're all investing, even corporations like Facebook, and all investing in building their own digital currencies. And so one of the things I would love to see personally is a really competitive environment where people actually can choose which currency that they want to store their value in. And if people want to hold it in pounds, dollars, euros, Bitcoin, gold, IMF special drawing rights, the central bank digital currencies, Facebook, Libra, at least people have the choice, and then it creates a more honest environment where it can call a check and call on all these different currencies and policies. So what is it about free banking that you advocate for?
Well, you've just made a fantastic case, and this is the beauty of free banking. Free banking means a free society. So if you go into just to look at that, when the Scottish independence thing was coming about, Scottish independence, and Andrew Neil, who's supposed to know what he's talking about, he doesn't really, but he was saying, look, what currency would the Scots use? What would they have the British pound, and so on and so forth? And that was quite a big discussion in the big debate of Scottish independence. But of course, what he didn't understand was it doesn't matter. It doesn't matter. You can any currency, because it's a question of, if you walk down Princes Street in Edinburgh and to buy a set of bagpipes, a Scotsman will sell you a set of bagpipes. He doesn't care what currency you give him. You could give him gold, dollars, euros. He's not bothered. because he will make that transaction as he sees fit with whatever exchange rate he feels he's comfortable with. It's a matter of two people trading in a free society. Now, with legal tender, they'll say you can only trade in pound notes or pounds in Great Britain, or dollars in the United States. That's totally crazy. You should be able to trade, individuals should be able to trade with other individuals under contract law in any medium of exchange that they so choose. Bags of salt, groats, hog bellies, it doesn't matter what it is. That is between two people to come to a contractual arrangement in a free society. So free banking is would be a massively important step. And of course, free banking comes when you get a breakdown. So if you go to Zimbabwe, for example, or Venezuela, or a broken society, free banking is what happens. The only currency they won't accept is their own legal tender, but they'll accept pounds or euros or dollars. So you actually have a free banking on a collapse by default. So that's quite an interesting concept, free banking, and I would certainly welcome it. But we're sort of teetering, if I may suggest, Simon, we're sort of teetering, are we not, onto the edge of Hans Hopper, and his book on Death of the God Democracy, I think it's called. What we've got here, and this is a whole nother debate, if you will, whether democracy as we have it at the moment is not always going to produce to the top the corrupt and powerful. Most politicians are sociopaths or morons. Sometimes they're both. So this is in the nature of the professional politician, and I assure you, I've met enough of them to know that, and so have you. So this is a question of democracy, and if you go back to the ethos of democracy in its Athenian days, the days of Socrates and Plato, and it's a wonderful debate to have. Their concept of democracy was, if I may use the American expression, skin in the game. Skin in the game. If you get a vote in a democracy, you've got to have skin in the game. Now, I've paid probably over £2 million in tax since I left school in 1967, as a rough estimate. I mean everything, booze particularly. So that's how much money I spent. I have one vote. A lawyer, a student in a bed sit in the local town who's never contributed a penny piece to society gets one vote. That was never the intention. That was never the intention of the original concept of democracy. And so when you have this manipulation, people being bribed with their own money, banks in a position of power, politicians, civil servants in a position of power, such as they have mainstream media, totally and utterly controlled by the establishment. Totally controlled by the establishment. And now, of course, the breakout was social media, and that's now being controlled by the establishment. So you can't put stuff on Facebook, you can't put stuff on Twitter, you can't put stuff on YouTube, it'll be taken down. If it's not, generally speaking, the establishment line. Deep waters indeed, Simon, deep waters indeed.
Yeah. Okay, we've gone down there, so I think it would be, as a final question, it would be great to get your thoughts, given where we are right now, on the US politics side. So we're obviously deep in the midst of an election. My fear for America, and by default America means all of us, because America is going to affect us all, and unfortunately we don't get a vote at the table. Only Americans get a vote, but the outcome will affect us all. My thoughts is that if we get a Trump win, with some of the IMF calling for Bretton Woods 2, I think Trump might be a protector of the dollar and try and maintain some of the status quo. But when it comes to Biden, I think the writing's on the wall that if we go down that route, we're headed to a much more socialist world. Even the stock markets are reflecting it right now. Normally you'd expect, if the world is saying that Biden's going to win, it seems, and normally you'd expect that to be negative for the markets. because you'd have higher taxes, you'd have higher regulations under a left-wing government. But actually, the stock market's loving that right now, and it seems because they believe that you're more likely to get a stimulus package. And really, the stock markets are not about markets anymore. They're about Federal Reserve and stimulus. And so I think the world has seemed to have accepted that the markets might actually be better off because the writing's on the wall, and you only are going to get any of the chances of a movement towards sound money or anything like that, or hard money, with the complete collapse of the entire system. So they want to take that to its greatest things. What are some of the things that you think about if you're following the US politics and the election at the moment?
Well, I think I've spoken and visited the United States quite a lot over the years, and I think the problem is that certainly Joe Biden will take America to the devil much quicker than Trump, but they're both printing money. The Trump administration, or the Fed, is printing money all the time, and it's quite clear that Trump doesn't really understand the implications of that. Otherwise, he would have tried to do something about it. So I think we have the same problem that we have here, that the politicians in both our countries don't really understand money. And if you're going into an election, nobody's going to promise to cut off the spigot, are they? It's everybody, certainly in this country, if you're going into election, everybody promises to spend more and more. Nobody goes in saying, gosh, the national debt's $2 trillion. Because the Fed in America, the debt, I think I'm right, is saying 27 trillion or something like that. And it's massive, it's beyond human imaginations. Now, what I'm disappointed about, because I was a Trump supporter last time round, he was talking a lot of sense. He was talking about disestablishing the establishment, if you will. He was talking about doing something about their absurd military defense budget, which Eisenhower warned us of in his retirement speech in the late 1950s of the military-industrial congressional complex. $1 trillion a year on military expenditure, which is borrowed money, 800,000 overseas personnel, 700 overseas bases. And he said, this is absolute nonsense. Wars all over the place. We've got to stop that. Did nothing about it, really. He stopped John Bolton getting him into more wars. Okay, give him a plus mark for that. He didn't listen to the psycho neocons. But he hasn't really got to grips with destroying the establishment. And that's disappointing. Now, it may be, and I'm not close enough to American politics to know, maybe it isn't possible. I don't think it's possible in this country. We're going to see reform of the BBC. We're going to see reform of the tax system. We're going to see reform of the civil service. None of this has happened, and I don't think any of it will happen, because I think the great wheels of state go on crunching round and round and round until eventually it hits the buffers. I think it's the same with America. And it's a great shame, because the American dream's been betrayed. It's been betrayed, but this wasn't recent. It was betrayed in the American Civil War. It was betrayed in the 1860s when they went against their own constitution to suggest that states couldn't cede from the Union, which was never the idea in the late 18th century of the United States. It was a whole voluntary thing. What we might see, Simon, and this is a little bit off the wall, that argument might come back, because there are some failed states in the United States. And of course, we all know that in the main, they're Democrat states and Democrat cities. Baltimore's a disaster. Portland, Oregon is disaster. So maybe there could be a whole new dynamic in American politics coming down the line. I don't know. It's a bit like Irish politics, the American, but it's a bit difficult to understand, isn't it, really?
Yeah. So bringing this all full circle and trying to loop it round then, I guess, is I think it starts, my big fear, and I'm not sure if you agree, is really is the retirement pension side. I think that's where people need to exercise the most control. My fear for the young people is that they don't really, they don't really think about their savings. They're in these debt cycles, and they're not really thinking about what they're going to be investing in. Bitcoin brought a breath of fresh air to that, because for the first time, all of these young people that were just focusing on debt and student loans and mortgages and increasing debt suddenly started thinking about savings and investing when they saw this new asset class that captured their imagination. For the people from the more elderly generation, it's pretty scary what the effect of this can have on people's pension with stocks and bond prices. And really a government that really just wants to inflate away your savings and encourage people to take on debt. Really the debt cycles and the impacts that can have on financial markets. So all we can do as individuals, I think, is start thinking and planning for our own things. And so really, I think this brings us to the final discussion point is some of those people that are thinking about their own pension, they may have, as you have, you've put most of your money into gold. I think you said 95% of your savings is held in gold. You put a bit of it into silver, and now you're starting to experiment with Bitcoin. What can we do as the Bitcoin community to help some of the people that are looking at their pension and retirement right now, and trying to look at what they could do to have an asset like Bitcoin, and get on board to diversifying a bit into this new industry?
Well, private sector pensions are underfunded now on average by about 40%. It's a disaster which dare not speak its name. Public sector pensions are funded, of course, are not funded, but they're underwritten by the taxpayer and they're index linked. And the cost of that, of course, is trillions. And this huge expanding public sector who think their pension schemes are always going to be paid. They're always going to be paid. They're not. This is based on the feeling that governments can't go broke. Your average public sector employee who's retiring at 60 on a very significant pension these days, indexing, believes that's going to go on forever. And he's going to be disabused of that. That isn't going to happen. The government's going to run out, or they will just print meaningless money to send to their pensioners. So there's a massive pension crisis coming down the lane. And it's important that I think that younger people understand that this post-war freebie world is coming to an end, and they're going to have to look to themselves. And certainly that means either gold or Bitcoin. I would say I've got some silver, but by way of diversifying. If youngsters are more comfortable in the Bitcoin community, I think that's fine because it can't be degraded. I mean, I love gold and I like Bitcoin for the same reasons, exactly the same reasons. So I'm comfortable if people went the Bitcoin route. But as a professional pension investor, I would always argue some diversification. Don't have all your eggs in one basket. That's not a good thing. All your savings should be, and because my portfolio is one thing, and of course my small holding here in Yorkshire is another. It's real estate, if you will. I mean, we live here, but we could live in one of the cottages or something like that. It's not a big deal. So yeah, you need this mix if you're going to protect yourself, which is what is coming down the road. What I would like to see, because I believe that older people would have a crack at Bitcoin, I believe they would have a go with Bitcoin if it wasn't so complicated. Now, my colleague, Patrick Gorton, who's a young man and a Bitcoin holder, he already had Bitcoin, and he's a great guy. I honestly, Simon, couldn't have done it without him. I couldn't have done it without him. And I think what Bitcoin needs to do is to make this simple. Don't want counterparty risk. The people who made it simple are people that keep it on their platform. You don't want that. You don't want that. You don't want somebody else keeping it. It should be made a lot simpler for you to get in. I did actually manage to get my own wallet. I eventually got there, but then actually putting the money in became even more complicated because I had an encrypted iPad. So it said whatever it said. I was in the wrong country to do it. It's not easy if you're an ordinary person, but older people, we've heard of silver surfers. We know silver surfers. Never confuse old with stupid. Old people aren't stupid if they've acquired some wealth to buy a Bitcoin, but just let's make it a little bit easier for them. And at the moment, I can tell you as a newcomer, it's not easy enough. It's much easier to buy gold sovereigns than it is Bitcoin. And I'd like to see Bitcoin to be as easy as a gold coin.
Yeah. Okay. So that's the challenge to the community. And one of the things that, when I was involved in 2011. I spoke at the first Bitcoin conference. Compared to today, it's a lot better. But we've got a lot further to go. And it's when you actually start to, sit down with people and understand some of the challenges in actually owning your own money, spending your own money, and being able to store that safely and securely, that we start to realize some of the challenges ahead. So my way was, I've invested in over 100 different companies to try and support that. And what we tend to find is that most people come in through a centralized custodian that can make the user experience easy. And then the job after that is to try and get it out as fast as they can and own it in their own way. And so rather than actually try and wait to learn everything, because it is a bit of an education, it's just like the first time you sent an email, you had to figure out how that all worked. But once you started sending emails, you realize it is as easy as sending an email. And Bitcoin is similar once you start doing it. But in general, people tend to have to start with a centralized custodian service. They can make the user experience easy, and then they can take their time and actually learn how to hold it in their own control, which tends to be the path that people go through. And so I would encourage people not to wait to learn everything, to try and actually get on board, because you might as well get started, try and send your first. And the beauty of Bitcoin is you can send fractions, very small amounts around. You can test things out. You can make some mistakes, and then you can just do it with larger values once you're more comfortable. So I hope that's useful advice for anyone trying to get this in the first place. So Godfrey, thank you very much for your time. It's been a very interesting conversation. And we look forward to having more people, come into the Bitcoin community, and anything we can do to support that along, and help people own their own money, have the ability to spend their own money, and actually have hard, supplies that cannot be changed. Then that's what this is all about, really. So I hope you enjoyed that interview. If this works the way we planned, then this will be live on both Godfrey's YouTube channel and my YouTube channel, Simon Dixon. So subscribe to both of those YouTube channels if you want to stay up to date with Godfrey's journey into Bitcoin. And I'll be covering everything banking, finance, and Bitcoin money investments as usual. And you can subscribe to that channel, Simon Dixon. So remember, no matter how bad it gets, you are alive at one of the most interesting times in financial history, and we want to make sure that you are on the right side of that change. Peace.